Hey everybody, Brian here. Today's Thursday, the 26th of October. Earlier today, I'd posted a tweet about a tweet that I made a month ago. And that tweet over here was this was a scenario on September 26th that I thought the market might encounter. That is, we had come down to the anchored VWAP from that March low, and then I was looking for a bounce up towards the 440 area, and then for it to come down to the year-to-date anchored VWAP and the 200-day moving average. This is the subsequent action. It didn't follow it perfectly. No one would really expect it to, but it did a pretty good job of saying, we're in a downtrend, so this makes sense to come down to where we are. 2 days ago, I had put this chart on saying the measured move of this head and shoulders pattern in the S&P 500. So you can see this is May, or I'm sorry, that's June, July, August, September, October. And what we were talking about is the height of the head and shoulders pattern is subtracted from the neckline of where it breaks down at 436. And to me, that projected a move down towards 411. We were at 421 at that time. Today, we came down and we came right into that 411 area. Now, that 411 area is important on the daily time frame because it's the anchored volume weighted average price from the 2022 low and the all-time high up in that area as well. We still have a declining 20 and 50-day moving average. We've just dropped a significant amount here, and that occurred after this failed breakout. As I pointed out over here, I was bullish at that point, got rid of my long there, and had a negative bias because we've been below the declining 5-day moving average. I still have a negative bias because we're below the declining 5-day moving average. But when I ask the question, where have we come from? We've dropped from 439 down to 411, where we were supposed to in terms of that head and shoulders pattern and these anchored VWAPs. It tells me there's probably little left on the downside for this leg at least. I'm not saying that we can't drop further this year, but it seems a logical place for a bounce. So what would that bounce scenario look like? I took the 30-minute time frame here, and this has the 5-day moving average on it. So you can see this is the beginning of September, and this is October. Here we are today, October 26th. And I kind of sketched in from today where we closed at 412.59, what would be a potential bullish scenario. Because again, I think we're more likely to bounce in here than it is to continue lower. It doesn't mean it can't continue lower, but I'm more inclined to wait for the bounce scenario to set up. If it doesn't set up, well, then of course I won't get long. But what I think we could do is see a little bit of a bounce here, maybe the next couple of days. And then in about the middle of next week, we get back above the 5-day moving average. So you can see from here on, I've sketched that in. I tried to match the font in that, but I've sketched it in. And when we make a higher high above that flat to rising 5-day moving average, to me, that would be a place to get long within the context still, though, of a declining 20 and 50-day moving average. So I wouldn't want to go full size. Instead, I would see the quality of that rally, look for it to make some higher highs and higher lows, ride that rising 5-day moving average, and then to exit somewhere over here. So I think we would probably take out this little high just to get people excited, so people would get excited saying, hey, it's breaking out and that sort of thing right here. And then they would get stuffed, as they often do, for being late. And then a little bit of a correction. And what would happen in this correction is that hopefully we would make a higher low. So what we have right now is we have this low in October, we have late September, then in October, so we have a lower low. This would ideally create a higher low. And then as we rally back up, find some support, get back above that 5-day moving average, again, right in here would be the place to get long. I would then expect it to rally up towards this trend line, which is the neckline of an inverted head and shoulders pattern. So we had seen a head and shoulders pattern form in the S&P 500. Just a quick reminder, here's our left shoulder, and then we saw a higher high and a higher low, and then we saw a lower high, and then the lower low was where the neckline broke. So all these head and shoulders patterns mean is a switch from higher lows and higher highs to lower highs and lower lows. That's why you see so many of them. Anyways, back to the sketch that I had drawn in. Create a higher low, have that 5-day moving average rising again, come up and kind of mess around, just trade underneath that neckline a little bit, maybe build some shorts back in there who don't believe in it, and then look to squeeze them here in towards late November into early December. If this were to set up in this way, and this is taking a lot of forecasting, and it could be blown up at any moment. If we had this first rally, I wouldn't say that that's confirmation this will come true. It might fail at 420 and continue back down to new lows for the year. We simply don't know. So it's all evolving, and each trade, each leg of this, I would trade on its own merits, but within the context of a potential turnaround. So again, if we take the height of the neck from here, the height of the head, let's call it 411 up to 435, that's 24 points. We add that to where it breaks higher right in here. That gives us a price target somewhere up around 450-ish or so. And again, it's not necessarily a price target. It's just a level that it has the potential to get up to. What would the 50-day moving average look like? Well, the 50-day moving average would look like this and then start to flatten out. The 20-day moving average would look like this and start to flatten out a little bit earlier. So, on the daily time frame, let's say we do this. There's our shoulder, and then we break higher. I would expect it to rally up into here, kind of get stuffed a little bit. Then all the gap closure people can look at that and say, there we go, there we close that gap. I guess we already did over there anyways. But the point is, this is a potential scenario. It's not meant to be a blueprint. It's something that could potentially happen. I update these types of scenarios every single day for subscribers to Alphatrends. So if you haven't taken a look, go to alphatrends.net, take a 2-week trial, and see if it's for you. Thanks.